Hello traders, Gary Wagner here just after 12 noon in Honolulu, 6 o'clock in New York. It is Tuesday, April the 7th, 2020, and this is the Daily Report for Gold and Silver. What goes up must come down. That adage proved true today when we saw gold spike to as high as 1742 on an intraday basis in trading overseas yesterday. In the same 24-hour period, though, it then reversed to the negative, currently trading down about $14. Of course, we'll go over that in detail when we look at our price board. But we did send out a special trade alert, effectively raising stops to 1668. That's a couple dollars below the low that we hit intraday in the market when it went to 72. Let's take a look at current pricing and then our technical studies. As you can see from the price board, gold is currently trading down, with gold futures basis most active June contract currently off by $14.20, and it is currently fixed at $16.79.70. Now, what's quite interesting about the move today is this downdraft, so to speak, has occurred right after gold had traded to the highest price it has been to in the last 7 years, as it traded to a high of 1742. That's all the same session. So we've had an interesting turnaround. I'm certainly looking at what we're seeing as a round of profit taking. I don't think this changes the overall trend of the market. I'm still extremely bullish on gold. However, we might see a further decline, but we'll have to look at our numbers as we pull up our technical studies. Spot gold, the spread is beginning to thin out between spot and futures, currently down 1360 at 1647.10. Now, whereas the other precious metals were lower with gold higher yesterday, the opposite is true today. Platinum, for example, is up $5.30 at $7.37. Palladium gained well over a full percentage and is fixed at $2,100, and silver gained almost a full percent, trading at $15.30.5 cents. A lot of the fall in the precious metals was lessened by dollar weakness. The dollar down by 0.78 and is currently fixed below 100 at 99.97. Let's take a look at our technical studies. A very interesting day in the gold market. The first thing that is absolutely noteworthy is the fact that we saw gold to trade to a new 7-year high as it traded to 1742, this high right up here. And then in a single day, we watched it move from a 7-year high to actually break back below its open, which was 1707, and close under pressure. Currently, we have gold down about $14 at 1679. That was the rationale behind raising our stop today. The low, which is this part of our wick here on our daily candlestick chart, occurs roughly at 1672. And so we recommended that all of our clients who are long at 1602 raise that stop up much tighter, 1668, a few dollars below today's daily low. We are looking at a daily candlestick chart. The difference between this and the last one we looked at is we have adjusted our Fibonacci retracement levels, because we did get that new high that came in trading last night. So you can see that we're now starting at about 1742 and taking it down to 1450 to cover the entire span of this rally, which began mid-March. When we do that, the first level of importance is the 23% retracement. That comes in at 1675. As you can see, the market traded right below that. Our stop's at 68. If it cannot hold this particular area and breaks through this on a closing basis, we would look at 1631. Otherwise, we could actually see a recovery come in fairly quickly in gold prices. We are looking at a short-term 240-minute candlestick chart, which means that every candle represents 4 hours in trading. We looked at this yesterday as we talked about in inverse head and shoulders, with our first shoulder, the head being here, and then our second shoulder here, and the fact that we had a clear and utter breakout above that particular price point. Obviously, that price was not sustainable, at least not today, and we saw the market trade back lower. Currently, as we talked about, at 1679. But here's what's interesting. When we look at this a little bit closer, meaning we'll go ahead and enlarge it, what you can see is that this last candlestick that is formed is forming as a true doji, where the open and closing price are approximately the same. That indicates that this level here at 76, let's say, up to 80, is a potential level of support. And we could, in fact, see gold pricing stabilize here, form a base, and then have another attempt to break and close above 1700. 1707 is a new level. That's minor resistance. Major resistance comes in at about 1750, and then at 1800 we now have a target because of this intraday high that came in trading overseas yesterday. Based on that, my recommendation is to maintain your current long position, 1602, maintain our stop that we put in at 1668, thereby locking in more profits. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.